What's up, guys? Welcome back to the channel. Welcome back to bitcoineasy.io and another Bitcoin analysis. Today, Bitcoin is sitting in a massive spot. Key resistance across the board, larger time frames, smaller time frames, and some other really cool stuff that I will show you in the charts later on. But there's one thing that I need to mention first, guys. I normally keep you updated over on bitcoineasy.io over on X. This is where I update the charts all around the clock. The fastest way to get my updates, you know it. But that account got suspended. Someone must have reported me, or I don't know if it's the algorithm that's picking up smaller crypto accounts to get rid of all the bots. No clue what's going on over there, but I just got verified literally a couple of weeks ago and nothing changed about the behavior on the account. No different posts, just posting basically technical analysis and sometimes sharing that I posted a new YouTube video, but literally nothing that could look like spam or scamming. So some idiot must have had a personal problem with me, I guess, or it's just X cleaning up. I hope the account is back soon, but for now, Pathos Crypto over on X as well. There you find my updates for now. This morning I posted something already. It ended up going through, but the first post that I attempted got flagged immediately. My account got blocked, but after a couple of minutes they said they reviewed the account and that there was no suspicious activity. Now just the blue checkmark is under review. So if you see Pathos Crypto without the blue checkmark, don't worry. Just make sure it's only Pathos Crypto, no numbers, no symbols, nothing. And then that's me, and that's where you will find my updates for now. Right, guys, enough from my social media problems, and we go straight into the charts now, starting out on the hourly chart and working my way up to the weekly chart to break it down all for you. Let's do it. Right, guys, here we are at the hourly chart, going a bit lower today than usually, and here's a very nice visual that I wanted to share with you guys. And here we can see this symmetrical triangle that of course got confirmed here now with this correction after we put in a high here. Yesterday, we came back down to the 61.8. We retraced that move here straight down to the 61.8, bounced here. Ideally, we of course don't want to come back down here. We now want to crack this area up here now to get up to our price targets here in the area of 89,300, right? Where we see that there's extremely strong confluence and resistance across the time frames. From the 4-hourly chart, we will see it and upwards. So if we get a break above here, right, above the previous high, and we can start closing above this box up here, then we get a strong indication that we're going up to those levels just mentioned in the 89.3K area and potentially even higher. That becomes a really, really strong level on a closing basis across the board, which we will see in a second. So let's look at the downside as well here, where we want to hold. Ideally, of course, we can see that we had a breakout of this diagonal line here. We're trying to consolidate here on top of the previous highs, but we got a bunch of rejections in the same area. And now we're doing a retest here of the diagonal, basically, looking to get back up here. So if this candle, of course, comes down here now and starts closing below the previous open, then we have a bearish engulfing, and then that's indication that we're coming back down here, at least to our previous local low here in the 61.8. And that is then, of course, an area where we just want to see a wick, where we really want to stay above the 50 here to stay in this trend, right? Printing these higher lows here on a local basis as well. And then it becomes really interesting here. If you go into the larger time frames, you can see here that we're still getting rejected basically at the exact previous high. And therefore, that's the number we want to crack here on a 2-hourly closing basis, right around 88,200. That's where we want to get above. And then here, either consolidate above, move sideways a bit, or break the top overall here at 88,500 roughly. And there you then see our first target here becomes more visible on the 2-hourly chart here, coming from the ascending trend line of this ascending channel, right? So we can see it right here. And keep in mind, this circle is going to be visible across the time frames that we will look at here up to the daily chart. So really, really strong area up here from this perspective already, because we have this ascending channel, of course, but it will become much clearer now in a second. We will see on the larger time frames from the 4-hourly chart and up. And to the downside, of course, here we have the same thing. We want to hold the low here. We don't want to go lower than that. And there's likelihood that we revisit this area here, 84,800 to 84K here. The absolute key line in the sand here. Also, if we retrace here this uptrend, right, from down here all the way up here, then we see that the 78.6 aligns perfectly here with our key horizontal level throughout the entire range that has been an extremely strong resistance level. And also the key level when we broke above it from where we put in our highs here, this high and that high. Here's where we spoke about last week, where I told you guys once we get a breakout out of this level here that we have another run towards the resistance of the ascending channel. And there you go. Here's where we hit it. And now, of course, we still have a huge target here, potential target here. And then it becomes really interesting if we can break above here on a closing basis. Then it looks extremely bullish across the board on the larger time frames as well, if we then can confirm there. And then here the 4-hour chart, more of the same stuff basically. Here from a local perspective, we're still trying to crack the previous high here on a closing basis. And overall, you can see the wick up here at 88,500, and then on a closing basis right around 88,200 is where we want to get back above and confirm. And then here we find the first alignment of the ascending channel resistance, right, from the 78.6. And that, of course, is the retracement here from this 93K, almost 93K high down to our current 76K low right here, down here, right? And there you can see the line in the sand is the 78.6. If we break through there on a closing basis, of course, then the likelihood that we revisit the previous high, and that then, of course, brings the long term into play on the larger time frames that we will see in a second as well. So keep this circle here in mind. As you can see, it lines up here with what we saw on the hourly chart, the 2-hourly chart here with the ascending channel. Now as well here on the 4-hourly chart, clearly visible that the 78.6 of this swing retracement here lines up there as well. More of the same here on the 6-hourly chart. There we're still struggling here. Same thing at the previous high on a closing basis. That's where we want to get above here, right around 88K. And then, of course, ultimately breaking here the previous high on a closing basis, 88,500. Then also gives us a move up there. We don't need to close above that to get there. We could just go straight back up there, right? And then still close below the previous highs here. And then we would have reached our targets and have a strong indication that we got rejection there. And then we have to see if we find a break in the market structure to identify a potential entry for a short position here back down to our lows, right? So really, really interesting how we get up there. And if we get up there, if we start closing above that, and of course that is the absolute bullishness that we are all hoping for. But the likelihood is still, guys, you know my bias, that we're getting rejected somewhere there in the 89 to 90K range, and specifically 89,300 is extremely strong resistance. Yeah, guys, and then to the downside here, more of the same basically. We want to ideally hold here in the 87,500 range here, continue from this low here, this little local uptrend that we saw on the smaller time frames. But then below we see the alignment here, the 61.8 of that Fibonacci retracement, right, from this entire swing here from the top to the bottom, lining up here. If we're retracing the previous low to the current high, there we have the 61.8. There we see that we had a bounce there already. We closed just above that level. So a key support level. If you revisit that level, this is where we want to bounce again. Otherwise, we have clear confirmation that we're going back down to at least the channel support here, right? This ascending channel support, which of course here you can see clearly visible as well, lines up with the 84 to 84,500 area here. Extremely strong resistance and support throughout the entire range. And there we also find the 78.6, the line in the sand here, to the downside of the smaller retracement. So a key level to hold here. If we break down from there, then obviously this area here comes into play, the 80K to 76K range, where we then look for either a double bottom formation somewhere around 76K, slightly higher low, or potential revisit of the 74 to 72K range, where we know there's massive support and likely massive demand waiting for a huge bounce. Right, guys, that's it here on the smaller time frames. Now let's go look at the daily chart, see what's going on over there. And there we see the circle again. I drew up another circle for you guys here to show you exactly where this is coming from. Of course, this here is the previous support area for the range here, from where we printed multiple all-time highs, right? The area between 92K and 89K, right? And there we can see that our January low and the overall low for this range is right here at 89,300, right? And that then finds perfect confluence here with the resistance of this massive descending channel, or if you want to look at it as a falling wedge, however you want to see it. And then of course also the Fibonacci level that we saw earlier, we can just pull that up here as well. Actually, let me see if I have it in drawings. If not, I'll just draw it up quickly. Here it is, the 78.6. So extremely strong confluence here in this area, 89,300. Therefore, if we can identify a close above there, especially a daily close, then of course we have confirmation that we're going at least to the previous high here in the 93K range, right? And if we get to that level then and start closing above here, above 92,000 specifically, where you can see that we had the previous range low on the closing basis, if we start closing back above there, right, then of course confirmation that we're reclaiming this range as support, and therefore likelihood that we're getting up here back to our previous all-time highs and retesting those again. So really, really key area here for the long term to come into play. And of course, guys, for me still, the likelihood is that we get up here, get rejected somewhere here. We could, of course, don't need to go straight to 89,300, but I expect to stay below there on a closing basis. We can shoot a wick above here, get somewhere into the 90K range, but I still think we're going to close it below here and then come back down here to at least revisit this 80K to 78K area. If not, the most likely, the most logical support level then lays right around 72 to 74K, as we know, and which becomes really, really clear on the weekly chart. Here we have it. So yeah, guys, here's the area that we've been talking about. And then if you look first, before we get there, let's look at the moving average, right? The 50-week SMA. As we know, as I say in every video, guys, this is the key confirmation indicator. Every time we start closing below it after printing an all-time high, very important, then we historically always went down to our bear market lows, right? The same is true the other way around. Every time we came back out of the bear market lows and closed back above it, we went on to another bull market. So the key thing, of course, here is not to close below. There's no problem if you shoot wicks below it, as we see here, and in many instances in the past, but we want to close back above it. And therefore, we can get down here, jump up from that area then, and find massive demand here due to the confluence. You can see the large Fibonacci retracement coming from the bear market low to our current top. The 38.2, the absolute key level for Bitcoin bull markets, is right there, support right on top of that range, right at 74K. And then in the middle of the area, we can see the smaller retracement here as well. And there we can see from the previous range low to the current high as well, we find the 61.8 right in the middle of that range there. And then, of course, the key area here that is marked from the previous tops of that range, a key supply area, and therefore then will turn into a strong demand or support area. The important thing, once again, guys, if we get down there, we want to find a massive bounce and close back above here, above the moving average. And you can see that the 50-week SMA, like I just said, lines up perfectly now with the current low here, right around 76K. So another key indicator here that we have to look at also as a potential springboard for us to just get there, touch it, and bounce up and drop a double bottom formation here. So these are the possibilities across the board. You can see key resistance spot right now. And here also on a weekly closing basis, of course, if you see the Fibonacci retracement, the 38.2 level here, then of course this is also a key level. If we can now close back above here, above 86,600 roughly on a weekly closing basis, then we also have identification here that we're breaking out of this retracement, that we reached the line in the sand, and are we going back here to test the previous range lows at least. And that also lines up there with what we saw earlier on the other chart, where we know that 92 to 93K is a really, really strong level. We want to consolidate and confirm 92K as support again on a daily closing basis. And there you see here on a closing basis, the weekly lows are right at 93,500 roughly. So that's if we get back above there on a weekly closing basis, guys, then it's very, very clear that we're continuing up here in our massive bull market. Now remember, guys, what I just told you about the smaller retracement, that of course the 61.8 here is a key level, especially if it comes in alignment with the 38.2 of the overall trend retracement. Let me show you something. So let's pretend here this is our cycle top and we don't know that this happened yet. Let's take us back here to somewhere in last year, exactly a year ago. You can see March 11th, 24 is when we reached the height of that range there. So let's go there and say that this is where we were right now. And there we can see that we also went back down here to the moving average, just below it, bounce back up, massive bounce here, close back above the moving average. That was the key thing here, twice. And we reached the 38.2 of the overall trend retracement, the same as we're looking for now, the level that's laying right below us here in this key area. And then if we take the smaller retracement, we can leave this one here, we just drop a new one, and we go to the previous range lows, just like with this one here, right here, right, that's the previous range low, and go to the next range high, the same high that we just dropped. And there we can see that we have the exact same setup here. The 38.2 of the overall retracement, the 61.8 of the retracement from the previous range low to the current range high, and then the 50-week SMA. That was the massive support that was holding us up and gave us the bounce in the previous range, and therefore here the likely scenario once again for Bitcoin. And you can track that back in the cycle. That's not the only time that it happened before, right? We basically, in a massive trend, in a big strong trend, it's more likely that we get a narrower retracement towards some of the 23.6 to 38.2 level, and the weaker the trend, the smaller the trend, we usually get a deeper retracement towards somewhere like 50, 61.8 or even 78.6. So the stronger the trend, always the narrower the retracement. And there we can see here that this range here from all these perspectives looked very, very similar. Right, guys, that's it for me for today. I hope I'll be updating you over on Bitcoin Easy.io account on X again later on. But for now, I'll be doing it on Pat.crypto. So keep your eyes open over there. Make sure to follow. And yeah, guys, if you're new to the channel, warm welcome. Nice to have you here. Would love if you subscribed. A lot of my viewers still aren't subscribed to the channel. Something crazy like 70+% or even 80+%. And yeah, drop me a comment, let me know what you like about the videos, what else you would like to see, who you are, who I'm dealing with here. And yeah, guys, smash up the like button, all the good stuff. And as always, guys, happy trading. See you soon.